Coinage's Crypto Project of the Year celebration is back, spotlighting the top projects in crypto, including the hot new pricing oracle Pyth Network. Pyth is challenging the incumbent Chainlink by expanding to new chains to bring pricing data far beyond its native Solana, and even making large inroads in traditional finance as well. Which nominated project deserves to be crowned Crypto's Project of the Year? You decide. Head to coinage.media to vote. All right, with us today on Coinage in this edition of Crypto Project of the Year, we've got the CEO of Douro Labs, Mike Cahill, on with us, building Pyth Network. Mike, thanks so much for joining us, man.
Zach, thrilled to be here and honored to be able to represent the network. Thanks so much for having me on.
Congratulations, man. I think, it's really fun to put this together and highlight some of the top projects in crypto. What you guys are building, I think, deserves some shine, deserves us to dig into it and present it to not only our viewers, but everyone who's interested in the top projects in crypto. And maybe we just start, Mike, with what Pyth's all about and the idea of Oracle networks, because there are some out there, but I don't think there are many that are trying to do what you guys are doing in terms of not just kind of focusing on one ecosystem or kind of one use case, but really a lot of different ecosystems. So for those who don't know, why don't we just start with what Pyth's all about?
Yeah, so Pyth is all about providing one of the pillars to create DeFi on chain. So finance at its core primitive, for an exchange, you've got three components to it. There's a price, there's an exchange, and then there's sort of settlement. And so the exchanges we're all familiar with, there's like the Jupiters and the Uniswaps of the world. The settlement's done on blockchains, and where Pyth comes in is it does that price component of it. It fits in this category of oracles, and like the classic example of an oracle is it is designed to create trust in an environment where some data is brought in exogenously. So blockchains spend all this time creating this trust mechanism, either through proof of work, proof of stake, and then if you bring in data from the outside world, how do you then trust that data? And so that's what an oracle is designed to do. So Pyth is very focused on getting the fastest and the best financial data so that financial applications are possible. And it has really helped encourage the growth of what we've seen in DeFi. It's been an incredible year to see all this growth.
Yeah, in terms of, I guess, other players in the same Oracle space, people might be familiar with Chainlink. Kind of started in the Ethereum ecosystem in terms of where they came from. You guys, at least your token, I believe, if I'm not wrong, focusing mostly in the Solana space, but obviously expanding again in terms of what you deliver to many other chains. And I'm curious there in terms of how you, I guess, respond to people comparing you guys to Chainlink. They're at about $10 billion market cap. I think last I checked, you guys are around 1.5. In terms of kind of tackling the opportunity, the market size there, Mike, how do you kind of look at that comparison to Chainlink?
Yeah, I mean, it makes a lot of sense. They do classify themselves as an oracle. And so, they came out and really were instrumental in creating the first wave of DeFi, so DeFi 1.0. And DeFi 1.0 during, say, 2020 was really marked with like lending protocols and things like Uniswap, right? Because you're on Ethereum block times, so you've got 12-second blocks. There's not a whole lot that you can do with regards to like order book or exchanges, and so you have all these design trade-offs. But the lending protocols really haven't changed all that much, and so you deposit something, your collateral has to get dollarized. And then you take a loan against it. And so long as your collateral's dollar position is within the maintenance amount, you can maintain that loan. If it goes below a threshold, you can get liquidated. And so Chainlink was providing the data for Aave and for Compound, but they would do these on a pretty infrequent basis. And so, and largely it was grabbing data from the public internet and having some set of redundant nodes who are creating that data so that you are able to establish that trust model. And you can think about it as like, let's say that CoinGecko has the price of Bitcoin. You go and ask 10 or 20 nodes in the network to go publish that data, and Aave gets to read off it. You're expecting them to all have the same data. So the Pyth network was designed for something specifically different, which is how do we get all the world's financial data on chain so that we can have better applications and remove all that latency. If I think about the Chainlink model, it was let's optimize for trust, but they did so unfortunately at the expense of speed. So Pyth was how do you optimize for trust without having to sacrifice anything on speed? And so there's a couple ways that Network does it. So the first one is, instead of going and grabbing data from places like the internet and like CoinGecko, let's go have the biggest traders in the world and some of the largest exchanges publish that data to the blockchain directly. And so there's this first party nature to the Pyth network. And this is important for just latency in general, but it's also important for how the network is set up in order to be able to expand beyond just crypto prices. So our view is that DeFi is really set up to be able to create this global financial market where everything will trade here at some point in the future. You can trade equities, you can trade stocks and bonds, and it'll just be very equitable, right? It's a kind of the future of finance for the entire world, instead of just having these disparate markets where it's like the US, the US financial market or the UK financial market. And so how do we expand that symbol set? And it was really important to understand the market dynamics for that market, where a lot of those data that are coming from, say, like US equities or futures, that's highly controlled by like one exchange. And so if you wanted to bring that data on chain, you either have to buy it from them or you have to recreate it somehow. And so the network was, well, we're going to go recreate it from somewhere. And it was from large trading firms who have lots of data, and being able to incentivize them to publish it on chain. And it gets published onto a single chain called PythNet, which is a derivative of Solana, and then made available to 85 different blockchains, as we talked about, which are now have the same equal access to all these symbols that are available and validated.
Yeah, it's been, I mean, it's interesting to see kind of, again, as all of this kind of becomes interoperable, and the idea of, I guess, needing to power these tools across different chains. It's become interesting to kind of watch different players in the space. We were just bringing up a chart that was looking at Chainlink in terms of their market share and how you guys have been growing yours and kind of where that goes. You mentioned the opportunity in terms of tokenizing all kinds of things, whether it's bonds and, again, stocks, not just here in the US, but I guess, what are the difficulties of doing that? And how do you guys at Pyth maybe look at the most, I guess, I won't say lucrative, but maybe the most interesting opportunities to focus in on if you kind of are testing in, DeFi and meme tokens and showing what's possible? It always feels like it's a little bit of a, hey, here's this experiment over here. You're trading these random tokens, but like we all know where this could go. So how do you kind of see, I guess, when you back up and look at the larger TradFi opportunities, if everything is to be tokenized, what that looks like?
I think it happens a lot faster than people are anticipating. So, the conventional wisdom is that real world assets happen through some, bank's tokenization product. I actually don't think that's the case. I think that when it ends up happening is through synthetic markets or perpetuals. Those markets get opened up around the world, and I'll kind of describe them. So, the big use case that has kind of grown materially over the last 2 years has been the trading of perpetual markets on chain. And so about last year, I think we were at 3% of DeFi perp trading versus like centralized perp trading. And this year we went up to 9%. So it's been a very, very healthy, steady growth. And Pyth has been the oracle that has really kind of enabled all of this. I think the market share for Pyth enabled perpetuals is over 60% on all the blockchains. And you can create a synthetic market for anything very easily. And that's, I think, the beauty of this. So if you figure a place where, access is the hardest, right? Like, so if you have these global financial markets right now, there are certain places like Nigeria where you're just totally cut out, and they have a disproportionate amount of exposure to Bitcoin than you would anticipate. Now, it's not because they just love Bitcoin, it's because it sits outside of the regulatory landscape there. It's not classified as something that's a restricted instrument, so they're able to get exposure to it. But surely they want to have exposure to like the whole world of investable assets. And from my perspective, is you can get somebody who's trading in one of these jurisdictions that has this appetite to want to do so. You can really provide them any instrument as long as you have that price feed. And so Pyth today has 550 different symbols or price feeds that are made available. 75% of them are in the crypto space. And that's largely because that's where the demand was. We think that this will grow materially, and we're setting out to make sure it does so. And so we're hoping to add about another 500 to 600 in the coming weeks that are going to be all in the equity space. So 25% of the Pyth network symbols are already in kind of real world assets, so FX, commodities, futures, et cetera. Wow. And that's an area that will continue to grow. The reason why this is so important is because you can bootstrap any of these markets, and they actually get strung together because they have these incentives and these mechanics in place where those markets, have this basis that gets created. So just to like quickly break it down, if I have a perpetual market and I wanted to issue a perpetual market for Amazon, Pyth has Amazon. It can be made available. You can do this on any blockchain you like, and it's trading at the Amazon price. Let's say that that market becomes large enough, and it goes from just trading at the Amazon price that's shown on NYSE or Nasdaq, and instead has some parimutuel elements to it. So you can order book on this local market. If those get out of whack, you create this basis or this funding rate. This is very common within the kind of the perpetual markets, and you incentivize people who are on one side of the trade versus the other. So you actually end up getting traders who then will go to kind of the local market or the reference market, and then either buy or sell a position to be able to hedge those two things, and you actually stitch those markets together. So I think that this is incredibly powerful to be able to create really quickly an entire global market, so long as you have all these prices. And that's why we're so motivated about being able to provide as many prices as we possibly can, to be able to create this really, really quickly in a streamlined fashion.
Yeah. No, I mean, I think obviously longer term, very interesting. Even in the shorter term, still very interesting because it looks like there's a lot of growth opportunities, as I said, in terms of new chains that you guys are helping with all of the data being passed through. One of those is Base. Looks like a pretty quick growth rate going on over there. And I guess, Mike, just to tie it back to the idea of, we've highlighted a lot of projects and crypto projects of the year. Many of them, some of them that do well are the ones that have large percentage gains to show over that time. One of the questions that our community always likes to know is a little bit of the tokenomics here. So maybe if we could tie in all the growth that you guys are projecting, or at least even seeing in the short term with new blockchains, how does it tie back to the Pyth token? What is kind of like the idea of attaching those two things?
Yeah, so the Pyth token launched actually a year ago today, at the time of our recording, and it is a governance token. There's a Pyth DAO, and token holders can stake and have a say in the network. There are a couple of different pricing councils and Pythian councils that run the mechanics for the network, and then there's a staking mechanism where the publishers are incentivized to stake their tokens, and when they publish correct data, they have rewards. If they publish incorrect data, they get slashed. Very similar to your classic proof of stake network. And the idea for the economics for how this works at scale is that every time a Pyth price is pulled onto one of these 85 different blockchains, so there's 450 applications that are using Pyth today across 85 blockchains. That works out to a couple of million transactions every single day, that are pulled across to different blockchains. Each one of those includes a fee that's paid. Currently, the fees are set to very, very small amounts, just given the fact of where we are in terms of the growth of the network. There's maybe 100 or there's maybe 10 million daily active users of DeFi. We expect that number to grow, and we don't want to prohibit the growth from kind of the onboarding of people by having the fees too high. And we think there's still optimizations that can be done on sort of the gas sides of things. But that's, it's a very elegant model because it doesn't require sponsoring of pushing these prices on any chains. It doesn't involve having to negotiate with applications for paying for these fees. It's simply set by the governance, and they can turn on fees whenever they want, and then they start to collect it, and it's up to the DAO on what they want to do with it.
Yeah, no, it's interesting, I guess, looking at kind of the different ways that some people are trying to use the token to influence projects and whether or not there's a direct, I guess, one-for-one kind of value capture when it comes to how these tokens operate and how they're used. Every project's different, and obviously all the missions of these different projects are very different as well. But Mike, when you look back on 2024, this is the part of the segment here where we often ask the people at the top basically what they're most proud of, what they're proud of in terms of the team, what you guys got done, to kind of, I don't want to say shill, but really let our viewers know why it was the case that Pyth has landed in our Crypto Project of the Year celebration. And I guess why they should be excited, because, we can continue showing these charts. We can show the TTV here, which I guess is a metric that a lot of people are looking at, total transaction volume, kind of looking at not just transactions that you guys are helping to enable here, but also, I suppose, the value secured through the assets that are relying on your guys' data feeds. But what is it that Mike's most proud of in 24?
Yeah, I think it's been the total transaction volume growth. A lot of people ask us, like, at what point would Pyth flip Chainlink? and that's something that we did long ago with regards to the volume secured coming through on this total transaction volume. We go to say like DeFi Llama, you can kind of sort by the total volume secured. And what's exciting to me is that that's showing that this thesis around having a global unified DeFi market is being validated. The growth from 3% to 9% of the on-chain perpetual market share relative to centralized exchange has been all powered by this. And so the fact that there are these innovative builders who are creating applications, improving UX on blockchains that are really pushing the boundaries in terms of what's possible for block times and the throughput, so that people are able to have a off-chain experience on chain, and really harness the power of what these price feeds were designed to be able to create. Pyth is a B2B business, so we really get celebrated through like the growth and the utilization of the applications that are powered by Pyth. And so, as I mentioned, there's 450 of them. We think that they're the biggest winners in the space. We think that they're the ones that are going to potentially take over the baton from traditional finance. We think that this is the future of finance, and it's being really validated that this has like been such a big growth element of it. So that's really what I'm most proud of. It's continuing to enable builders to create applications that the world really wants, and we've seen that this is not going away. And so now we just got to continue to kind of lean into it and scale it a bit more.
What I guess building off of that, as you look at kind of carrying the momentum from 2024 into 2025, what are maybe some of those things that our viewers should know in terms of the roadmap for building on all of that, and maybe potentially even accelerating as we flip the page into the new year?
Yeah, so Pyth has a couple of different elements to it today. There's an entropy, which is kind of a random number. There's some sort of infrastructure that's designed to strip out like MEV. It's called the Express Relay. I wouldn't say that you should focus on those. I think that the big audacious goal for Pyth is to increase the speeds with which are possible. So speeding everything up, getting closer and closer to the time of zero, T0, and then massively expanding the breadth of symbols. And so we aim to do that at large scales over the next several months. As I mentioned already, we hope to add before the end of this year another 600 symbols, and then be about even weighted with crypto and US equities. But beyond that, we want to become very aggressive through 2025 in the expansion of the symbol list that's available. The way that we benchmark ourselves is against TradFi. So Nasdaq's got 3,500 symbols. NYSE has 2,500. Those are obviously just U.S. equities. The CME's got 3,000. Those are just futures. So we think that what the future for Pyth will look like is the tens of thousands, if not more, symbols to be able to provide to a unified layer that everyone has equitable access to. That's transformational. And if you can do this at much faster block times, right? We're at 400 millisecond block times, which is what Solana came out with. We're experimenting with how to bring those times down and to increase throughput dramatically. There's a lot of work that the Fire Dancer team has done to make Solana faster. We're able to benefit from some of this because it's open source. And those are really the two things that I think we're going to be most laser focused on. Like, how are we going to lower the barrier for the industry to collectively win and make it possible so that we have these new futuristic trading applications or investing applications that really don't have the limitations of a regional trading environment. So it's not just US equities that are available to the rich world, it's everything available to everyone seamlessly.
Yeah, I think that was really interesting too. I mean, obviously, Coinage made its name after doing the first interview with Do Kwon after the Terra collapse, but Terra was experimenting with some synth assets in terms of tokenized securities and being able to trade those. I think there are still some questions, and obviously it's going to be a big pivot if we have a new administration coming in here in the U.S. for like what is allowed and what's not. But to wrap up, Mike, I mean, every time we have a really smart founder on, such as yourself, we like asking kind of what people might be sleeping on. And it doesn't need to be related to Pyth. This is the part where you could just kind of say whatever you're excited about in general in crypto. But, we've gotten some bold claims, bold calls for what people are sleeping on from other founders. What would be yours, Mike, in terms of saying, hey, y'all should be paying attention to this because it's coming sooner than you think?
I actually think it's this message we've been hitting on, and I want to try and rearticulate it a little bit more precise. The world of being able to create a globalized market that trades seamlessly over a DeFi application is much closer than we anticipate. I think that the people who are sleeping on this the most are the large exchanges all around the world. They think that they've got these comfy monopolies because they've got the network effects of all the US traders in the world that want to trade US equities or in the US trading on the NASDAQ rather than IC. I think that the retail applications and demand for that is about to change super dramatically. And part of it has to do with this new administration. As you mentioned, like, when you had Mirror and Do Kwon, obviously he got himself into hot water, and the administration was very clear that they wanted to make sure that this got stopped. So we'll see how things change. We've already seen since the election of Donald Trump, applications that have started integrating some of the Pyth equity feeds. But I think that the technology is there. The technology is there, and I think that if we see anything like the growth rate we've seen over the last year of DeFi perps competing with the CeFi perps, we're going to start to eat into the market shares of the Robinhoods and Revoluts of the world for all of DeFi, and really expand the number of people that are actually in the financial markets, just like we've seen with the growth of Spotify or Netflix or any of these other breakthrough technologies where you've actually just brought down the barriers, removed the friction, and increased the number of users that are possible.
Well, it's been really fun to watch. I gotta say, it's been a big year for you guys, and very excited to have Pyth celebrated as one of our top projects in crypto here, edition 2024. Mike Cahill, thank you so much for coming on, man. Appreciate you taking the time.
Thanks so much, Zach. It's an absolute pleasure to be here, and really looking forward to next year.